Welcome to revision 10. This is the first one in the interpret external, and today we're going to focus on the difference between markup percentage and gross profit percentage. Formula you'll get in the back, but markup percentage is equal to the gross profit divided by cost of goods sold times 100 over 1. So here's your supplier. Your supplier sells the goods to the shop for $10,000. So here they will come into the shop. Then the shop adds a markup of $8,000. So for every dollar of cost, they're adding 80 cents. So that's what the markup is. And then the customer is going to buy them for $18,000. What we're concerned in markup is this way, how much we add on to the cost price to get the sales price, and in bold or underline, you're going to write the words on average. Then we're going to go to the gross profit percentage. So gross profit percentage looks like this. So we'll move the supply down to the bottom, better get the customer at the top. Awesome. So gross profit percentage is equal to gross profit over sales. So the focus is on the sales dollar and not how much is added on. So what happens is we've changed the order around here. So let's focus here on the customer. The customer buys a good for $18,000. That's all the customers. It's not an $18,000 burger. And the shop makes a gross profit of $8,000 of that. So 8,000 gross profit over 18,000. The sales price is a 44% gross profit percentage. And add 10,000 will go back to the supplier. But this one, the focus is on the top part. What proportion of the sales dollar on average goes back to the owner or the shop in terms of gross profit from every dollar that they sell? So in this case, it's 44 cents out of every dollar of sales becomes gross profit for Burger Shop. Good. Enjoy the Kahoot.